Hey traders, welcome to Top Tier Outlook for Sunday. This is going to cover what's on the radar for this coming week. So great to see everybody. All right, so as always, I'm going to do a quick run through what's going on right now. The bell is just rung, if you will, in the Asian sessions. We're getting a really early look at what's happening abroad. But of course, this does not mean that's what's going to be inherited by the European and UK session, or that even by 7 a.m., 13 hours from now, this is going to be the tone, right? So we just get an early look at what's going on. So for me, it's going to be a really interesting look because I was out on Friday. And so I know there was a sell-off, but where did it take us and where could it present some opportunity? And what corners of the market am I focused on, right? I'm going to take a look at the great big marketplace of currencies, metals, indices. I look at treasuries and energies, and I say, all right, where is there opportunity? It's not equal, right? The market doesn't exist. The market is sort of this general thing that we say about usually the S&P, right? The S&P is the last thing that I'm actually interested in, quite literally the last thing. What is going on with the NASDAQ? What is going on with the Dow? What is going on with the heavily weighted sectors in the S&P? So please don't get in the habit of saying, all right, what's the S&P doing today? Because quite frankly, I could care less in terms of the priority of what is going to ultimately indicate where the S&P 500 can go. I'm going to start with the NASDAQ because if there is weighting that suggests what the S&P can do, it's usually going to start here in tech. The first 6 stocks in the NASDAQ index are the same 6 stocks in the S&P. However, after that, we start to see more financial in play, more healthcare in play, and that's where the S&P can be a little bit more related to what's going on at the Dow. So we've got to understand what's going on at a sector level, which isn't really something I can do on a Sunday evening. The first thing I'm going to take a look on Sunday is what is my relative outperformer? And I got to tell you, gang, the relative outperformer is the NASDAQ, mainly because the XLK and XLC, so that's tech and communications. By the way, if you've been reading Top Tier Outlook for the last couple of months now, this is not a surprise. The emphasis on the NASDAQ is by no means a surprise that this is where the attention is at. Because when I take a look at XLK and see where it ended up, I mean, we ended up closing. Actually, let's move this 5-minute aside and take a look at the hourly and the daily time frame. We landed right in the daily price movement range. If you take a look at where the NASDAQ was on Friday, we landed in that daily price movement range. And if I've got relative outperformance, this is what I'm going to focus on. Where is the support within the context of an outperforming index, outperforming sector, outperforming stock? And you might say, Rog, what does that even mean, outperformance? So we hear this word relative outperformance. What does that even mean? Well, the first and the most important thing in relative outperformance is relative to what, right? Now, is it relative to some random technical scan? By the way, that's probably what 95% of traders do. They run the entire stock market, irrelevant of liquidity, irrelevant of volume, irrelevant of any kind of cohesiveness as to why one stock might move similar to another. Just kind of look at all maybe 2,000-3,000 stocks that might be commonly considered, commonly traded. All right. So beyond that, what happens? Well, now most scanners look at things from a perspective of a technical similarity. It might be a minimum volume, a minimum open interest, maybe at an option level, maybe not necessarily, maybe a certain relationship to some moving averages. It could be RSI oriented. It could be CCI, MACD, whatever it is. But is the technical similarity why the stocks are moving together, or is relative, and this is what very few traders do, is relative to the index or relative to the sector, right? Is that what it's relative to? And if you've never thought of it that way, what's in the XLK? I'm going to show you here right now. What's in the XLK and why would I care? So this is actually my multi-chart layout. So let me show you what's inside the XLK just for a different perspective. So I'm going to crack this thing open and say, all right, what are the stocks that are weighted in this sector? These are what's relative to each other. So I thought I'd kick off the first few minutes of the session talking about, I'd say this word relative outperformance about 2.7 million times per week. What on earth are you talking about, Rog? So if we're confused as to why certain names move together, this is what it is. And if you start with this understanding of what relative really means, you're going to be looking at a grouping far different and usually far more effective than what most traders do, right? So that's a huge edge. If you're looking for edge, how about look in a place where there's a cohesiveness to what's going on with the indices? All right. So with that being said, what are relative outperformers? I would, for the most part, focus on tech, communications, energy, and oil explorers. If someone said, hey, Rog, what are your favorites? I'd say those four are my favorite. But my favorite isn't because I have my favorite stocks. It's another mistake a lot of traders make. What's your favorite index? There's this orientation towards S&P, which isn't necessarily always with merit. Or what's my favorite stock? That doesn't mean it's going to be the relative outperformer. We can measure this very objectively. We can look back the last week, the last day, the last month and say, all right, relative to everything else that might be weighted in an index or relative to all the major sectors, what's leading and or lagging. So we can do this too. I'm going to show you how I do this. All right. This is really very much just the rinse and repeat of what I do in the Sector Secrets Mastery. So if you're wondering, Rog, what is the edge of this? What's the reason? And I'm actually trying to find, there it is. Here are my sectors. So I'm going to log in to CoiFin and I'm going to go ahead and look at the US sectors. Cool. And what I have here is a normalized performance for the quarter to date, right? If I want to change to the last month, the last 5 days, the last 1 day, which is great for day trading. Now I can start to look at, all right, what's been overall leading the last 3 months? Take a look. XOP, XLE, OIH. Why is that? Because crude oil and natural gas have been moving. And those stocks related to that have been moving. If I take a look at the last 1 month, it's going to look a little different. You can see that communications and healthcare are sneaking up in there, as is tech, which takes me back to focus on tech, focus on energy. It's not because they're my favorite. It's because that is where the relative outperformance is. So if you've always wondered, what does that actually mean and how do I go find that? This is it, right? So this is the first step, right? So when we think about how we start our day, this is the first step. And I will also say, it's the most important because fills are great, but the way we get paid is follow through. How do we find things that have the best chance of follow through? And that's really how I can break this down. All right. So that's kind of what I wanted to start off this session with. Hopefully this gives you something to put to work in tomorrow, right? In the very next session. And ask yourself, am I looking at things relative to some random technical criteria? Or am I really finding the things that'll move together, influence each other? And this is really important during earnings season. So we'll talk about this a little bit more during Charts and Coffee tomorrow, because this cohesion is even more important during earnings because this is tail wags the dog season. One stock has the ability to move an entire sector or move an entire index because of an outsized number of points that stock could move. All right. So as always, gang, happy Sunday. Great to see everyone. All right. First question. All right. Let's get to them. Nick asks, my weekend's fantastic. I just got back from a trip to Nashville and I go to a writing workshop once a year with one of my favorite, actually two of my favorite authors. And it's just a great way to sort of reset. I'm not one to sit on the beach and do nothing. I wish I could, but that's a great getaway. And I had a terrific weekend. So thanks for asking, Nick. All right. What do I think of Euro US? So let's take a look at the Euro US. So when we look at Euro US, gang, I want those of you that are wondering, Rog, I don't trade spot. I don't trade Forex. Why do I care? I'll tell you. Give me a moment. So Nick, as far as Euro US, it's in a downtrend. So this is going to be short the rip. As long as that daily time frame's in a downtrend, short the rip. Now, If we're talking a 1 hour or if we're talking a 5 minute, obviously those market trends are going to shift and I could get a neutral opportunity at an oversold buy. I could get a 5 minute trend follow. So, not knowing that at the moment, big picture, daily time frame, it is in a downtrend. Now, why would non-Forex traders care what the Euro US is doing? Because the Euro US is also this thing. This is the 6E. Now, there's always a conversation about the US dollar, usually quite misplaced, but there's often a very common conversation about the US dollar. The common thought is if the dollar is up, equities must be down. I hope that I absolutely crushed this dogma, this sort of one of those things that gets repeated again and again and again, but is not necessarily true. If you want to check this out, I broke down a lot of this in this video right here, relative performance setups. So very much related to the first 10 minutes of the show today. What is it that I'm looking for when I talk about the relation between the euro and the dollar? They are the highest negative correlation. So in other words, if the euro is up, the dollar is down, or in the case of what we have right now, if the euro is down, the dollar is up. But in this video here, I went into a lot of detail as to why, when you take a look at price action, this notion that if the dollar is strong, this crushes the equity markets is so categorically wrong, and yet so often repeated. It's got to be up in the Hall of Fame of nonsense with sell in May and go away. Absolutely, because there's no steady correlation. In fact, the correlation right now, I believe, is about 10% between what goes on in the S&P and the dollar index. Why is that? Why do I say dollar index? Remember, don't get in the habit of saying it's the dollar. It's not. There's no such thing as trading the dollar. You might say, whoa, Rog, did you have too much caffeine this afternoon? It's always the dollar index, the dollar basket. It's euro, it's yen, it's pound, and then a little fairy dusting of 3 more currencies. There's 6 currencies that are in this index. So the same way the S&P 500 is not a stock, it's 500 stocks in a basket we call an index. It's the same thing with the dollar. It's 6 currencies in this index that we call, the dollar, US dollar index. 58% of that thing is the euro. You want to know where the dollar is going? Keep an eye on the euro. So I would continue to focus on the short side of the euro, but I'll tell you, one of the best currency setups at the moment is the yen. And this makes a lot of sense because equities are not weak, gang. I know it gets so easy to look at the last 2 days and lose track of where 2023 is. This is 2023 in the S&P, which isn't even my favorite index, right? And it's hard to call 2023 bearish. If I look at January, the first day of trading day of January, and then I move out to the current view, we're up on the year. Can't say this is a bad year for the S&P. It may be volatile, right? What about the NASDAQ? It's even more obnoxiously up. So wouldn't higher yields and the strong dollar say, oh, stocks must be in trouble? That's not tracked at all, which goes back to, let's be very careful about what we think about. And I know that isn't your question, Nick, but I think a lot of folks are saying, Rog, if the dollar's up, isn't that bad for stocks? No, it just simply isn't. Take a look here. Haven't yields been higher all year long? And look at the NASDAQ. So, and the same thing goes to the 10-year. If I want to focus on currencies, Nick, I'd say yen. Now, why yen? Because if the yen is weak, it tends to reflect a carry. What is a carry? It's the interest rate differential between 2 currencies. Every central bank has an interest rate. And if you have a pretty decent difference between 2 interest rates, then there's this ability to say, well, I'm going to be long Australian dollar, short yen, and the interest rate differential between those 2 central banks is the carry. And then if the Aussie yen goes up as well, now you're getting appreciation on the trade as well as that interest rate payment, right? So it's the cherry on top. Well, 6J is one of those currencies, this is the yen versus US dollar, where if the dollar is strong and the yen is weak, that's going to be the gift that keeps on giving. We'll have a nice downtrend. However, why would the yen also be weak? The yen is typically weak when there's strength in equities. And what happens is traders, investors, they borrow yen or sell yen to fund the purchase of higher yielding assets. So in other words, weak yen typically means, generally speaking, stronger stock. So as long as the yen is in a downtrend, it will likely indicate general support in equities. And it also more immediately indicates the yen is losing ground against the dollar. And I like this one a whole lot more even than the euro, Nick. So just something else to look at. So great question. I love talking about some currencies. That's fantastic. All right, next up, Ren asks, in setups, i.e. alerts that I provide, what does the word aggro mean? Is the spreadsheet used in the class Excel? If so, I'll need to get a sub for Mac. So Ren, that's okay. So some of what Ren's asking, gang, is very much part of our Sector Secrets Mastery. Ren, probably the best place to get support for the mastery is in the mastery, right? But I can generally cover a little bit of this. So aggro is a word that I use to denote a smaller size. And if you open up the spreadsheet, which you can do in Google Docs, Ren, so that file can be opened up in Google Docs as well. But Lorna has her tech session tomorrow at noon Eastern, so you can definitely ask her there. So Google Docs works. But aggro denotes a smaller position. So we're not going in with full budget. So when you use that spreadsheet that was supplied in the Sector Secrets Mastery, what you're able to do is say, all right, this is the size of my account. This is then my allotted budget and 25% of that. All right. So there is, I think, a numbers version. Yeah, but it's not been updated. So just open up the file that's in the room drive, Ren. Just open it up in Google Docs and it's going to be perfectly fine. We don't have that many folks on Mac, so we have an older numbers version. But yeah, just open up the one in Google Doc. I know that'll work for sure. All right. So of course, Ren, my pleasure. So yeah, go into the room drive. I'm not even sure the numbers version's there anymore, to be quite frank, but because we haven't updated it. So the one that's there now is the brand new updated one, and then open it up in Google Docs. And, this brings up something else. How are we managing risk? The thing that we emphasize the most in the Sector Secrets Mastery, which you can check out over at sectorsecrets.com, is we're always emphasizing what's your position size, what's your risk to account. And the reason I emphasize that is, and the reason I think it's so important is I can sit here and say, I've never blown up an account. And the reason I can say that is I was always taught to prioritize trends, position sizing, risk management. And as long as I prioritize those three things, I'm going to be on the right side of the market more often than not. And when I'm wrong, which of course is going to happen, when I'm wrong, I'm not risking max debit. I'm not risking a disproportionate amount of my account. What happens a lot of times is traders with very large size accounts and traders with very small size accounts, when they step back and ask themselves, if I'm wrong in this trade, if the trade does not do what I expect it to do, how much could I lose? And sometimes I see traders are risking 10, 15, 20, 30% of their account. No way, gang, right? That's way too much, because if you do that once or twice, you've blown up your account. And by the way, how do I define a blown up account? Down 50%. Because at 50% loss, if you have $10,000, it goes to $5,000. At $5,000, you'd have to trade to perfection just to get back up to even. And seeing how not the opposite of perfection is why we got to 50%, even 45%, where we stop and say, okay, whatever I'm doing is not working. Let's look back and see what we need to fix in order to kind of get the train back on the tracks. And really, the best way to do that is have a formulaic approach. And that means fixed bet sizes, fixed stop losses, and knowing risk as we're getting into a trade, or even before, where you look at, say, okay, this is the cost for the trade. This is how much I could be risking of my account. And then you get a chance to say, I'm not comfortable with that, or I need to adjust my budget, my position size, so I'm risking less of my account. And those are all things that, are very much the priority. The Holy Grail, that's what I call the Holy Grail in the Sector Secrets Mastery. So, Jan, yeah, if you want to head on over to sectorsecrets.com, that's just an easy link to remember to head on over to the Sector Secrets Mastery service. at Simpler Trading. So Sector, SECTOR, Secrets, SECRETS.com, and boom, it'll take you there. And just like that, gang, Top Tier Outlook is wrapping up. I'll see you tomorrow for Charts and Coffee, 9 a.m. In the meanwhile, enjoy the rest of your day. Actually, I'm watching a little bit of football right now. Chiefs and Chargers. Looking forward to the Dolphins and Eagles tonight. Great F1 race. Verstappen fans, I'm sure, are thrilled. Mercedes had a great outing. Hamilton had a great run. I tell you what, if there were 10 more laps in that race, I think that Merc would have caught up with the Red Bull. So even though Red Bull and Verstappen have locked up the season, there should still be plenty of really great racing to come. So awesome day. Thanks as always, gang, for being here. I'll see you tomorrow. Be good to each other.